Welcome everyone to the next session for the 2020 SOFA Summit. I am thrilled to introduce our next two speakers from Cash Flow Tactics, Brad Gibbs and Ryan Lee. Welcome. How are you guys today?
We are good, Mark. Thank you. It's a pleasure. It's an honor to be here. We're excited.
I should have been on a couch.
I didn't yeah, come on. You got to be on the sofa.
We're standing. I'm standing. So Mark gets to relax on the couch. We're standing up. But man, I hope the audience is ready to also stand because we're going to be delivering some awesomeness today.
Yeah, we're really excited. So for those of you that don't know, they are the founders of Cash Flow Tactics, and Cash Flow Tactics' goal is to help you achieve financial independence or financial freedom in 10 years or less. And what's great about them is they have a replicatable and duplicatable process that they are going to teach you the step-by-step process of how to actually accomplish those goals. And so that's it. I'll let you guys share your screen and take it away.
All right, let's get after it. I'm excited about this, Mark, because so much of what we do, in fact, just about everything that we do aligns so closely with what you guys do. And we've had such a good relationship over the years with really taking the people that we talk to inside of our community and then teeing them up for you and your expertise. So it's gonna be really fun rolling through this. Brad and I are gonna roll through this together. Now, I'll be honest with you. Brad is the brains behind this whole operation. And I was the one dumb enough to just go out and try to figure it out until I could validate it with the brain. So when Brad and I joined together, it's been almost 8 years now, Brad. We really got in and we're like, okay, look, what's working from a mathematical side, from a practical application side. And we just started for our own selves, for you, Brad, and me. We started trying to figure out how can we become financially free. So that's really what this is. It's how if we could do it, guys, it's how you can become financially free in 10 years or less. And I said that right. This is not marketing hype or anything like that. You'll see how we back this up in 10 years or less, regardless of your age, your income, or your experience. Now, you guys have probably seen a lot of presentations on real estate or investing or whatever it might be. The thing that is going to make this different is this aligns with a different perspective around what money is and ultimately what it represents. This is one of my favorite spots in Southern Utah. It's called Angel's Landing. And Angel's Landing is perched right up on a peak. And when you're climbing up this mountain, you're just climbing right up the side. And, when you're climbing up the mountain, you have a very limited perspective, right? You can really only see what's right in front of you and what's directly right behind you. But when you get to the top of this mountain, like you see right here, you have an amazing perspective of where you've come from. You can see for hundreds of miles ahead of you. And that's really what we're hoping to give you guys today, is a different perspective around money. Now, we want to make sure that this presentation really aligns with multiple kinds of people, because who out there doesn't want to have more money working for them, or doesn't want to have more financial freedom or more time? No matter where you're starting from, we all generally want the same thing. So whether you're a new investor and this is your first foray into alternative investing into real estate, then guess what? We're going to show you the only way to cut out the noise and focus on success. If you're an experienced investor, someone who's been in the game, I promise you what we're going to share with you today is going to narrow your vision even further to accelerate your results. So we're going to go down that rabbit hole for both sides. Now, as we go, like I mentioned earlier, Brad and I, we take a lot of pride in the movement that we lead, because we feel like we lead this out of experience. In fact, when we built Cash Flow Tactics, we never envisioned it 7 years ago to be Cash Flow Tactics. We envisioned it for ourselves. We were both stuck. We were in a position where we weren't getting what we wanted out of our lives with our money or anything like that. And so we sat down to figure this path out for ourselves. Now, in the beginning, Brad, a lot of people said we were crazy. And most people said, hey, you guys go do the crazy stuff and we'll see you on the other side. But over time, as we started getting results, we had a lot of people coming back, friends, family, neighbors, coworkers, and saying, what the heck are you doing? And it was really awesome. In fact, Chad, he was one of our very first guys. In fact, we met him. He was one of the very first people to listen to what we put together. And he was kind of our guinea pig. And in the beginning, Chad was stuck and anxious around money. In fact, Chad's story was, he actually likes what he does professionally. The dude flies helicopters and he didn't want to quit, but his wife wanted to come home from work because they were getting ready to have their first kid. Now, Chad is a lot like Brad. He looks at the numbers, he stresses about the numbers, he thinks about the numbers. And when his wife wanted to come home from work, naturally he wanted to provide and support that, but he could not figure out a way to make this work. He lives in the People's Republic of California. And so let alone was it too expensive for him out there, he'd never thought that he could become ever financially free if they lost one of those incomes. So fast forward to today, he has been able to secure all of his capital, no longer riding in the roller coaster of Wall Street and what we call vaults. We'll talk more about that. He's been able to take and leverage his vaults and turn that into 30 plus cash flowing properties. Today, he is almost 100% financially free. His wife came home from work, and more than anything, what we love about Chad's game plan is he's now living a life of purpose. He's not stressed out about money. In fact, money is now just his tool to build and live a life that he loves. Okay, so guys, we don't want to build up a lot of our accolades, but we've known Mark for quite some time. We've built a business that has literally served thousands of people across the country in getting clarity around how to become financially free. This is an award that we were able to earn. I don't know, was this a couple of years ago? Stand on stage. It represents the amount of value that we've created in the marketplace. This is our third business partner right here inside of Cashflow Tactics. His name is Jimmy Vreeland. We kind of tease a little bit, each one of us is a Marvel character, right? Brad Gibb he's Tony Stark. He's the mad scientist. I'm Captain America. I'm the one out there fighting for freedom. This guy right here is the Hulk. And so we have to keep the Hulk kind of behind closed doors. The scenes a little bit. Yeah, until he's ready to come out and smash something. So we're going to keep him off this presentation. But outside of business success, outside of financial success, what does it all mean? Guys, for us, it's about freedom. It's about owning and controlling your time. It's about living a purpose-driven life. These are just some of the images that represent what financial freedom means to us. And as we go through this presentation, I would invite you to ask and think for yourself, what do you want? What does financial freedom mean to you? Because when we sat down to build Cashflow Tactics, yes, we offer investment advice, but that's not really what we do. Our objective is to empower you in the conversation of money. Right? Is to give you principles and tactics that work, that have stood and will stand the test of time, but it's also to give you the confidence to rise up, to take control over your financial plan. I want you to think about it. Up to this point in your life, has anyone ever cared more about the success of your life, the success of your financial plan than you? But yet if that's true, how much of your personal power are you giving away? Are you just investing blindly in a 401k hoping that it's going to work out? Because what is ultimately required to get what you want to live free is rising up. It is taking control. It is taking action. So as we dive into the tactics, I want to share with you just a little bit of context because Brad and I, we both started off in very similar situations. These guys like to tease me a little bit that I was kind of a party boy. In fact, I dropped out of high school back in the day. And for me, when my social conditioning kicked in, I was about 23. And 23, I woke up and I'm like, holy cow, I don't have a high school diploma. And I know a responsible person goes to school and gets a job. And so that's exactly what I did. I went through school, but I went through it with such a fire and a fury. I wanted to get done as fast as I could because I just wanted to check the box off. So I went to school, I landed in the corporate world. And over the next 7 years, I spent quite a bit of time trading everything that I cared about in the pursuit of one day and this mythical idea, this distant idea of retirement. And we'll talk more about that in a minute. But ultimately, I found myself where I was completely stuck. Nothing was working out for me. I was literally stuck in the rat race and I could not find a way out. Brad has a very similar story. So Brad, why don't you walk people through a little bit of your story?
I want to back up a second. Go back to that picture, Ryan. This is one of my favorite pictures that when your social conditioning kicked in, you were doing so good that your boss gave you a $25 Olive Garden gift certificate, right? Yeah. Like that epitomizes so much of just being stuck that no matter what we did, right, we felt like all we were getting for it was an Olive Garden gift card at the end of the day. We were not actually making the progress that was promised inside of this path.
I appreciate you rubbing salt into the wound, Brad. Thank you.
I need to point that out anytime that I can. But my story was different, but the same, right? I went and got a degree that I thought would be very useful, right? When I looked at college, I didn't care what I studied. I wanted to provide for my family. I wanted to be a value to the marketplace. And I was conditioned that financial security came from good grades, a good degree, and a good resume, right? So I got the school I was at was BYU. I said, what's the most prestigious program on the list? The accounting program was top of the list. So I signed up for the accounting program. Now, fortunately, it also is my love language. If you've ever read the 5 love languages, there's actually a 6th and it's called accounting, but most people don't know that. So it happened to work out well for that. And then I completed part 2 of my plan, which was to get a prestigious enough job that my resume would be secure. So I went to work for the evil empire. Forgive me for that, but I was working for Goldman Sachs. Now, at this time, I didn't realize what we were headed into, but this was tail end of 07, leading into 08 is when I got that job. So everybody think back to what was going on in 07 and 08. And very quickly, this other picture on the other side of the screen here was my reality. The entire financial system was collapsing around me. And what really woke me up here was, I think, if you hit one more, does the title to this slide come up or did it disappear?
I think it did.
No such thing, right? I realized that there was no such thing, right? There was no such thing as a safe and secure job. There was no such thing as a bulletproof resume. There was no such thing as security coming from that path or that plan, because there I was sitting next to, like, we were next door to Lehman Brothers, and one of the other most successful financial institutions in our country, and it collapsed on us overnight. I still remember walking out of the subway that morning, having not yet heard the news, to hit the button again and bring the pictures up there, Ryan. I saw this firsthand in the flesh. We walked out of the subway and hundreds of people were filing out of the Lehman offices with cardboard boxes in hand.
Yeah.
And then I spent the next, sorry, Ryan, to cut you off, but I spent the next month with all of my peers wondering, stressing, worrying, would we be next? And if we were next, would we ever be able to get a job again? Right? So there is no such thing as safe and secure.
And I love that story. And Mark, I'm sure if we went into your backstory and why you do what you do today, it's probably very similar. And, you know, what we found over the years, really what resonated with Brad and I when we first met several years ago, was we both wanted the same thing, right? We wanted to own and control our time. We wanted to be free. We didn't want to retire. That wasn't what we were looking for, but we did want to choose intentionally what we did with our time. And, you know, ultimately for me, when I landed in the corporate world and I started climbing the corporate ladder, just like Brad, and I felt stuck, I found a really just an insatiable desire to figure out how to go faster. And so I started diving into the world of alternative investing, right? And this in the beginning was kind of exciting. There were so many different things to choose from: option trading, gold and silver, penny stocks. I thought Jim Cramer back in the day was my best friend because I listened to that dude so much about foreign currency, the dinar. I did fix and flips. I did everything. And ultimately what it led me was further down the rabbit hole of being overwhelmed, stressed out, and never really feeling like I was ever getting further along my path of owning and controlling my time. We tried almost everything. And ultimately what I found as I went down this alternative investing rabbit hole was everything that was pitched was just a different version of the same thing. Is how can you invest in the stock market better, faster? How can you put options or puts or calls on your investing? But it was all market-based, which meant at the very best, I was expecting an average +1 result. And as you're going to see through this webinar, the entire purpose of what we're discussing is how to reject the cult of the average. Then one day I came across this book. If you haven't read this book and you're watching this presentation, I promise you this is going to further enlighten you on what money is and what it represents. When I read this book, I learned that money represents something that I'd never considered before. Now, I knew I wanted it, but I'd never put my finger on it until I read this book. Money simply represents time. And when you add up all of your money, if you don't know how much time your money is going to offer you, then you're investing the wrong way. At the end of the day, it doesn't matter how much you have. It's how much cash flow or how much income your assets produce and how long that's going to last you. So naturally, I thought, okay, if money represents time and I'm looking for cash flow and Robert Kiyosaki's talking about real estate must be the way to go. Now, don't get me wrong, real estate's pretty awesome. When I bought this very first house, I walked around with my chest all puffed up and I thought, I'm a real estate investor. Look what I've got. I have $300 that just showed up in my bank account. And I was pretty excited. This was my first taste of cash flow. Now, that excitement was kind of short-lived because just like everything else, I've quickly found myself back on a roller coaster feeling like this poor little dude right here, overwhelmed, stressed out, not knowing what was around the next corner, and again, getting further behind on what I really wanted. Now, when Brad and I finally synced up, we started to look at what was working, what was duplicatable, what was working in his strategy, what was working in my strategy. And we started to scientifically, if I can say that word on a webinar, but we tried to scientifically prove out what are we doing and how do we duplicate those results. The entire objective was how do we get predictable outcomes for every dollar we put into a machine. Over time, the people that said we were crazy started saying, what the heck are you doing? Over time, what was once fuzzy now became clear. And we ultimately ended up with a clear path to say, okay, look, we know how to achieve financial freedom for ourselves. And we started leading a community that anyone can duplicate what we're doing. We've built this down into a system that anyone can do this. In fact, over the last 5 years that we've been operating Cash Flow Tactics the way we operate it today, we've been able to secure over $15 million of people's capital. No longer is this money subject to Wall Street, subject to the ups and the downs, to people crossing their fingers, hoping that it works out. We've been able to redeploy that idle capital into over 500 turnkey assets. Many of those are done with Mark and his amazing team that today is generating almost $200,000 a month. Okay, $200,000 a month of passive income to our community. Okay, now what would that do for you if you had a small piece of that puzzle in your financial plan? How much time could you own? What could you do differently with your life? So as we go through this webinar, we've broken this down into 3 steps, 3 tactics, because for us, there's a big gap between knowledge. There's lots of knowledge out there, guys. You can go watch webinars, listen to podcasts, read books, but the only way you bridge the gap from knowledge to wisdom is through taking action. So the objective of this is to give you tactical application to show you how to get results in your life.
And what everybody, the reason why we want to walk through it this way, Ryan, just to interject real quick, becoming financially free is not the same as going grocery shopping, right? It's not that we just need a list that once we've added all of those things to our cart, we'll somehow be financially free. What you and I discovered, Ryan, is financial freedom is what we call, and this is my nerdiness coming out of me, but it's what we call path dependent, right? We have to go in the same order. Think about it this way. Mark, last time you went to the dentist, right? That he put you through he didn't just add everything to the cart. You had to go in a certain order because your root canal would have been a very different experience if you had the root canal first and anesthesia second.
Big time.
And doing it in reverse order, correct?
Yes, sir.
So wealth creation, becoming financially free is path dependent. We have to go in the right orders. We have to do the right things, not just have all the right stuff. So that's what we want to take everybody through, is understand what we discovered in that path to becoming financially free to get there on time, on schedule, without this chaos of being on a roller coaster.
Love that. That's great clarification. In fact, that actually boils down into our first tactic. It is literally a formula. Okay. Now, if you've never seen this before, I promise you, you know what this is. You just have never articulated it this way, but we're going to walk you through a formula. And it's the only proven system that wasn't just invented yesterday to run a webinar. This has been historically proven over hundreds of years. And we just took what the successful people have done and we modeled after them and broke it down into a system, a path dependent, that will show you how to get results that you're looking for. Number 2, it's Henry Ford's untold secret to wealth. It's how I today, and I want to be clear about that today, generate over $10,000 a month in passive cash flow, spending less than 30 minutes per week. Remember, this is all about you owning and controlling your time. And then tactic number 3, it's the real secret. It's the dirty secret that when Brad was on Wall Street working for the evil empire, Goldman Sachs, this is the thing that financial advisors on Wall Street do not want you to know about because it takes away their power. But this is the ultimate thing that will give you your power back to achieve financial freedom. So with that in mind, let's go into the formula first. Now, the old path to retirement, just like I said, hey, when you want to put your big boy pants on, I knew you go to school. So I went to school and I was like, I'm just going to school to check a box off. So I don't really care what I'm learning. So I got done with college in about 2 years. I landed in the corporate job. I was all excited and happy. My parents were proud of me. And then I know everyone has to put money in a 401k if one day you want to retire. So that's what I did. Now, all of this was working because as I looked at my surroundings, everything confirmed that I was doing the normal thing. I was doing what everyone does. And at the end of this, somehow one day, hopefully I thought, well, maybe I'll find a way to be happy. But what no one ever told me about is really what's on the other end of this is praying, right? Hoping that it all works out, crossing your fingers, hoping that everything works in your favor. Now, that's the old path. The new path is completely different. Understanding first and foremost that you're not trying to retire. You're trying to achieve financial freedom. Now, back when I read the book, Rich Dad, Poor Dad, he broke this down really simple. When your cash flow exceeds your expenses, you own your time. That is financial freedom. And when I had all of my money in a 401k, I didn't know how much cash flow was going to be offering me, which meant I wasn't really free. Now, after this, we need to pair this up. This is our target, right? This is how we measure success. Now we need to pair it up with what we call the core 4, the 4 pillars, and velocity. Okay, so we're going to go through this step by step. Now, going through college, right? I'm throwing all my money in a 401k. And guys, I bet many of you have felt and experienced this, whether it's been in real estate or it's been in the stock market. I thought I was doing everything right until I realized one day I was doing everything wrong. I lost almost 80% of what I had saved up to that point in my 401k. And in the beginning, I was really sheepish about that, right? I felt like I had done something wrong. But I remember as I started opening up and talking to my coworkers, I realized, holy cow, everyone is doing the same thing I'm doing. You know, that guy wanted to retire in 5 years, but now he's never going to retire. And I remember looking at this person after person, we were all in the same boat. And I realized for the first time, I'm trying to go faster, but yet I'm doing the same thing everyone else is doing, somehow miraculously hoping for a different result. That is literally the definition of insanity. This came full circle for me, right? Because with every promotion that I took in the corporate world, there's always a trade-off, right? Yes, I earn more money, but on the tail end of earning more money, it required more out of me. I had to travel more. In fact, you know, I had bigger teams, bigger responsibility. And there were 2 times in my corporate career where I literally lived in a different state than my family because I traveled so much. And I remember one day I was living up in Indianapolis and my family had chosen to stay back in Texas because they were tired of moving. And I got a call from my wife. And on the other end of that line, I'll never forget that day, she was crying uncontrollably. Now, this is on the tail end of me losing almost everything we had in our 401k. And then she tells me my oldest son at that time, who was 4 years old, was going to need an emergency open heart surgery. Now, guys, at that moment, I had a real awakening. Now, I hope you don't have to have one of these life slaps right in the face, but I realized I was failing in every aspect of my life. I was hoping that one day I had enough money that I could come buy my time back and figure my life out. But in the process, in the pursuit of trying to get money, I was trading everything I cared about. Now, fortunately, I came home and my son is okay. He's 14 today, 14. He's taller than I am. That doesn't take much, but he's healthier and doing better than ever. But Brad, you had a very similar result as well. In fact, I like to tease Brad that he's the mad scientist, right? I went out and I got just enough information to get excited about something that I'll go do it. But Brad's a little bit different. He likes to take these 2 thingies, I don't even know what they're called, but he likes to take these things and he likes to go into the world of the matrix and he likes to figure things out. So Brad, why don't you talk a little bit about your story to really what the financial freedom formula is?
And again, what we're here to do is try to help chart the clearest and the fastest path. Ryan's was not the fastest path because he kept screwing things up and not exactly knowing and all over the place. And mine was a slow path because I way overthought it. I thought I had to have all of the answers, read. I was the student that I read every word in the textbook. Like I read, if the teacher assigned a chapter, I read the entire chapter, highlighted it, and like that's how compulsive I was with it. So I read Rich Dad Poor Dad just like you did. I read a book called Think and Grow Rich. And then I became an obsessed podcast listener. I think a lot of, Mark, your audience here probably resonates with that. And then for me, then step 2 wasn't go buy real estate. It was study, research, and find mentors. So I bought courses. I learned more. One of the first vacations I took from my job, when I had a paid vacation, is I went to a real estate course and tried to learn on what was going there. And then step 3 still wasn't buy anything. It was build some models and obsess over more numbers. And I started building spreadsheets and projecting things out and then going to more conferences. And you can see the pattern, right? Then I would go to a conference and come back and be like, wait, I'd never heard somebody do that. So I got to tweak and adjust my model and read another book. And they said, do that. So I was stuck in this loop of learning and reading and studying, never actually moving forward until I finally got a mentor that held my feet to the fire and brought my plan to life, right? And that's the very first investment property that I ever purchased. The top unit of that condo was the first one that I ever bought.
And guys, I'll be honest with you. If you've never seen someone that does math and gets excited about it, when Brad's formulas work out, which we're going to show you here in just a minute, this is how excited he gets. He gets all excited, jumps up and down. It's alive. And Brad, when we first merged our stories together, when we first merged our paths together, we realized, hey, you're not doing it right because you can't take 44 months to buy one piece of real estate. You'll never.
Well, that's what we missed in the story was that whole process took me 44 months. That is not financial freedom in 10 years or less. That's not a path to success. It was debilitatingly slow. And I think there's plenty of people listening to our presentation now that are stuck in that analysis paralysis mode. So this is for you as well.
So this is really what solidified it for me, because up until I met Brad had already figured out that real estate was the right thing. And I was trying to do a little bit of everything, thinking that if I did everything, something was bound to work out. And when I sat down with Brad, this is the first thing that allowed me to shift gears and start to really pick up some momentum. We call this savers or losers. And it's coined off of what Robert Kiyosaki says inside of Rich Dad, Poor Dad. But here's the math behind it, the actual tactics. So Brad, since I'm running the numbers, this is going to be a dangerous thing. Why don't you walk us through, or do you want me to give you the screen and you run the numbers on your
No,
end?
you run it. I'll just talk you through it.
Okay.
That's no problem. Okay. So let's take somebody that makes $200,000 a year, right? And so in the present, so basically, let me back up. What we're trying to get at here is why we need a formulaic approach to becoming financially free. Why we can't just say, well, I just need to generate a high enough return, everything will work out, right? We've been taught that rate of return is what matters, and we just need to find, a collection of all the right assets that'll get us there. Okay. What we want to expose is that's not the path to becoming financially free. It's what Mark and his team help clients do every single day, but it's hard to see unless we point it out. Okay. So we're going to point out that unless you've got a plan that includes and understands what Mark and his team do, this is what we spend all of our time doing, is helping them understand this. And then we send them over to Mark to get it done. Okay. But type in income of $200,000.
So, right, I got 200,000 in this calculator. Is that what you want?
No, we want it in, we're just going to use this one. Yep. So what we're trying to solve for here is how hard does our money have to work to make us financially free? Okay. That's what we're trying to do here. So let's say you currently earn $200,000 a year. And let's say somebody, oh no, sorry, I screwed this up from the beginning. Let's take a step back. This is what happens when you get me excited about numbers and we're going too fast. We're going to start with, somebody that earns $200,000. But Ryan, let's say somebody's 10 years, 15 years into their career. What would be a respectable amount if they were following all the traditional advice that they have saved up in their retirement accounts?
Mark, what do you think? I mean, you see this all the time. I would say maybe $100,000. What do you think?
Yeah, I was going to say in between 100 and 200,000.
Cool. Let's put 150 grand. Let's split the difference. So in present value, type 150,000, not there, up above.
Oh,
see, we're all kinds of messed up when I can't run the calculator. So we're starting out, we got $150,000 saved. Okay. And let's say this person is a diligent, studious person, and doing better than the average American, but let's say they're saving 10% of their income. So $200,000, $20,000 a year, right? That would be, Mark, you probably see that you probably deal with people that on average are well, staying into a budget, living within their means. They're not in credit card debt, all that kind of stuff. They're good savers, right?
Correct. And potentially even able to save even more than 10%.
Even more. Yep. So let's start at 10 and you're going to see, and we're going to blow your mind with going higher than this. Okay. Now we've got to answer the question, what, following traditional advice, what does financial freedom look like? Okay. I'm not going to purport that I know this. I'm going to go to the traditional financial world. And no matter how you solve the equation, they're going to tell you some variation of you need about 25 times the income that you want to replace in assets. If your focus is accumulating assets, i.e. saving your way to retirement. Okay. So we're going to take Wall Street's answer at face value and say you need $5 million accumulated in assets. Okay. Now this is where we come to the table and we set this audacious goal for you to say, we're going to show you how to solve this equation in 10 years. Okay. Now, Ryan, I don't hate 401ks, but people say I do. But this is why. The very simple math problem that we solve for now down below here at 36% is if you're starting with $150,000 and you add $20,000 a year to it, it's very simple math to say that money has to earn 36% to be able to end at 5 million. Mark, was that clear enough? Did you follow that?
I got it.
Okay. If Mark can follow it, I think the listeners can here too.
Well, I didn't believe Brad when he told me this the first time, and I've always been a really good saver. So Brad, when you ran through this math, what was the first response I came back to you on?
You're full of baloney. I'm not going to listen to you. I'm going to go do it my own way anyway.
And I'm going to save more money. I'm just gonna
so then once you believed it and said, okay, fine, my money has to work 36%. We went through this conversation. I said, Ryan, can your 401k ever consistently and reliably produce 36%?
No.
Then it's holding you back. Because if it's not doing 36%, it's meaning the money that's not in your 401k has to work even harder, right? Stocks, bonds, and mutual funds. Can they do this?
No.
Picking Jim Cramer stocks. Can they do this?
No.
Right? So unless it's doing this, it's hurting you. Okay. But Ryan is stubborn and hard-headed. And he said, fine, I'm just going to work harder. I'm just going to save more money. So I said, cool, Ryan, here's what we're going to do. What if you doubled the amount of savings? Is that possible? Okay. We'll go back a second, put it back to 20. You're not good at the reveal, Ryan. We got to do the reveal.
Sorry.
So at 20,000 in savings, if we were going to double it, most people would say, I can't double my savings. Ryan's answer is, well, sure I can. I'm willing to make whatever sacrifice, but think for a second about the sacrifices required to double your savings. You might have to pull your kid from private school. You might have to downgrade a vehicle. It could be done. It would just come at a pretty great sacrifice. Okay. So think for a second what that sacrifice would be for you if you were going to double your savings. Now, Ryan, type in the 40,000 because the payoff better be worth it. Did you see the number did change?
Yeah.
But it only went from 36 to 32%.
Yeah.
Mark, did it fix the problem?
Barely. Didn't fix it.
Didn't fix it. 32 may as well be as 36 because impossible is impossible, right? We doubled the amount of savings, you guys. And it dropped our required rate of return 4%. This is the game that we're stuck in. If we want to be free in 10 years, in a reasonable time to still be able to enjoy the time that we have and pursue things that are meaningful to us, more savings isn't the outcome.
Yeah. And now this is where people fall right back into, okay, now it's not a 10-year game. That's impossible. So the only other thing you can manipulate is, well, let's just wait more time, right? If it's not 10 years, maybe 20. 20 years, now we need 15% every single year for 20 years. That's not possible. I know people like Warren Buffett doesn't even do that. So let's go 30, right? 30%. Now we're getting into the realm of even stretching the imagination, what might be possible, even though the average investor earns closer to 5% when you look historically. Now you're in a game that here's the game, right? Work for 40 years of your life, cross your fingers, hope that it all works out. And this is why so many people find that they're stuck. This is why we start here. Because Brad, I think you said it eloquently that if your money's not doing the minimum, it's actually working against you. In my example, if it's not doing 36%, why even do anything with it? I might as well bury it in my backyard. It's doing the same thing. Right. And so the way we sum all of this up is we don't want to get in a fight of what's better, do this, do that. It's really easy. Look, if what you're doing isn't working and if your objective is financial freedom, and this is why we put a definitive time frame on it in 10 years, 97% of what you're doing is dangerous, misleading, or wrong because A, it will never work in 10 years, B, it'll likely never work in 40 years, and C, all you're really doing is you're fighting gravity. You could argue against it. You can deny its existence because you can't touch gravity, but the second you walk up to a cliff, right, and take that step off, you're going to learn the lesson the hard way. And I think this is where so many people find themselves. They learn this lesson the hard way. Most people that we talk to, they're in their 40s, 50s, and sometimes their 60s. They've followed all the rules, just like Brad and I were following the rules. And then they wake up one day and they realize, I am nowhere near where I need to be able to retire. So our goal is not to help you do the 97% better, right? Our goal is to help you literally do the exact opposite. So let's go in through this framework really quick so we can get to how we put it all together for you guys. So we know what financial freedom is, right? Financial freedom is when your cash flow exceeds your expenses. No longer are you investing for net worth. It doesn't matter, right? Invest for things that produce income. Now we're going to talk to you about how to focus. And this is what we call the core four, okay? If this is what keeps us focused on the 3%. No matter when you invest, you need to ask yourself 4 questions. You need to evaluate that investment by 4 pieces of criteria. And the first thing that you need to increase inside of your investing is your level of control, right? What happens to most people is they get in a position where I don't know what the market's going to do, right? I'm just going to cross my fingers and hope that it works out. If you're not in control of what you're investing in, can you ever predict the outcome? No. Nope. Can you impact the outcome? No, right? So if you're not in control, you're stuck. The next thing that you have to do is Brad just did the math, right? And hopefully that didn't scare you. Hopefully that awoken you, but you have to now get a higher rate of return. We're not arguing that. That's for sure. But if I walk out to Jim Cramer and the stock market and everything else out there that's traditional, and I say, hey, my name's Ryan Lee and I want a higher rate of return. What's the response?
Take more risk.
Take more risk. Who in here, Brad, Mark, do you like losing money?
Hell no.
I hate losing money, right? And so you need to be able to get a higher rate of return, but actually minimize your risk along the way. And last but not least, the biggest destroyer of wealth is tax. Now think about what you're doing with your money right now. If you are putting your money in places where you're deferring your tax, what the heck are you doing, right? I mean, you're saving for cash flow, but yet you're deferring your biggest liability. So you need to evaluate your investing on increasing your control, increasing your return, decreasing your risk, and decreasing your tax. Now that might sound like a fancy thing to do, but how the heck do you do that? So the next thing that we're going to do is we're going to talk about the 4 pillars. How do we increase your return and actually systematically decrease your risk? Now, when we sat down and actually started thinking this through, it really blew our mind. So let's just do a quick case study. Let's say you're going to do things average. You're going to invest in the stock market. Or what if you hang out with Mark and you decide to invest in a piece of real estate? That doesn't look very exciting, but what can it do? Okay, so there are potentially 4 ways you get to make money when you invest, depending on how you invest. Mark, I'm going to ask you this question. When you put your money in the stock market, what's the one way you make money?
Appreciation.
You got it. Hopefully, right? Hopefully it goes up in value. Now, we see a lot of people that invest in real estate the same way, right? They think the stock market and real estate are basically the same thing. And if they buy real estate, it goes up in value. This is the only thing that most people look at. And if this is the only way you're investing, then guess what? You're back to where we started. It's a 30 to a 40-year game. You don't control it. And you're always crossing your fingers, hoping that it works out. However, on the other side of this, what if we shifted the game a little bit? What if we invest our money for cash flow? Brad, is it possible to have an asset like real estate that delivers positive rental income every month and goes up in value at the same time?
Every day. That's exactly what my investments do.
Now, Brad's kind of a funny guy, as you can tell. This dude likes to read the tax code as a bedtime story, and he literally enjoys it. Brad, what is the tax code for investors like you and I?
If you do it correctly, there is an entirely different set of rules written for us as investors, where if we do it correctly, we can not only have it go up in value and put cash in our pocket, but we get to tell the government at the end of the year, our Uncle Sam at the IRS, that we made 0 money, and they tax none of the cash that hits our bank account if we do this correctly.
So it's not a tax deferral, it's a tax elimination, right? And on the last piece of this, we get to use the most powerful tool in finance, which is leverage, right? And so what this ultimately means is I can come to the table and let's say this property is valued at $100,000. I'm going to use leverage and I only need to bring $20,000 to the table. So I'm getting a return here. But what happens if the value of real estate goes down? Do I cry?
Nope, you're still getting cash flow.
Yeah.
I still collect my checks.
Still got my tax deductions, still use leverage. What if the real estate value goes, or what if the tenant skips town and my cash flow dries up? Well,
freak out. It's not working. Mark lied to me. Nope. I don't pay taxes. I'm still paying the mortgage down, and it will be worth more when I fix it up and go on my way. I get to recoup all that.
This is the 4 pillars. This is how you get a higher return without taking more risk. In fact, over here, if the stock market goes down, I can only hold on before so long, then I'm frowny face and I'm not very happy about it. And then I get pissed, right? And so this is how you go fast. And when we really started sitting down and figuring this out, I got really excited. And I wanted to know, well, okay, awesome. If we're looking for 4 pillars, how many investments have 4 pillars? I'm going to choose between the plethora of investments. And oddly enough, this is why we say the 3%, there's only 3 that have all 4 pillars. Congratulations. If you own and control a business, you have an asset that can, if you treat it right, produce a return in all 4 pillars. We already talked about real estate. The third one is a vault. And when I realized this, again, this just allowed me to say, okay, anything that's not getting me 4 pillars, anything that's not focusing on a return high enough while reducing my risk low enough, anything that's not fitting that criteria, I'm just going to let it go. It's 97% and I'm going to
remember the shopping cart example here, right? It's not looking at what the wealthy already have in their shopping cart and saying, if I get all of those things in my shopping cart, I'll be rich like them. That's not how the game is played. All of the people that are financially free in a period of time less than 10 years, they did it in the right order. They started a business or made enough money. They secured their capital in a vehicle designed like we do with the vault, and then they bought investment real estate. They did it in that order. And then once they were financially free, then they started doing all the things that you see them doing now. So unless you're a billionaire, you shouldn't do what billionaires do now. You should rewind the clock and do what they did in the first place to get themselves in the position to be a billionaire. That's what these 3 assets do.
Love that. And in fact, speaking of billionaires, when I learned this the first time, I wasn't a billionaire, but I learned this the first time. I'm like, there's no possible way that investment grade life insurance contracts exist. And I thought there's no way. But as I looked into this, this is a place, we say it's hiding in plain sight because it's literally spelled out in the IRS tax code, but it's a place where you can keep your money safe, private, and protected. It's a place where you can have guaranteed growth on your money forever and an annual dividend with over 100-year track record behind it. It's IRS sanctioned, meaning all of your growth is 100% tax-free. Your cash is liquid and can be leveraged. We'll talk about that here in just a minute. There's no red tape. You control it 100%. It gives you tax-free income whenever you want, and it protects the most important asset because it is life insurance at its core, which is you. And I thought, man, there's no possible way. But I want to ask you guys a question. We have worked with several people over the years that have made a lot of money. But on the tail end of them making money, very few people ever figured out how to keep the money that they're making. So in the long run, it's not just what you make, it's what you keep that really makes you wealthy. So what is your plan to protect the money that you're making? As you're investing in cash flowing real estate, what do you do to get to raise the watermark, the bar every single year? And when I first heard about this, I thought, hey, there's no way. This doesn't exist. I've never heard about it. I'm not learning about this in school. My dad didn't tell me about it. There's no possible way. But going back to Brad's comment of billionaires, well, some of the most wealthy people in the world have done this for years. In fact, Warren Buffett and Bill Gates, they have over $1.5 billion in what the New York Times calls a tax loophole. It's not a loophole, but this is what the New York Times calls it. Some of our most famous and profitable banks, Chase Bank, Citibank, and 217 other major banks have as much money as they possibly can. Regulated by the IRS today, it's over $143 billion in these type of vaults. And politicians, including our president-elect, have secured millions of their own dollars in these accounts, but yet they tell the public nothing about it. So now we're starting to get this framework together, but now we need to put it all together. And so, I'm a big movie buff. I like Top Gun, I have the need for speed. This is all about going fast. So we're going to bring all of this together, and we're going to do it with the Oracle of Omaha here. He's going to tell us what we should invest in. So let's listen to one of the wealthiest people in the world tell us what he thinks is one of the best investments out there. Maybe.
Switch your speaker.
Oh, if you get a 30-year mortgage, it's the best instrument in the world, because if you're wrong and rates go to 2%, which I don't think they will, but you pay it off. I mean, it's a one-way renegotiation. I mean, it is an incredibly attractive instrument for the homeowner. And you've got a one-way bet. Berkshire can't do that. We cannot issue a 30-year bond and have it so we can call it off tomorrow at par. No way. And that you as an individual can do it. It's a great instrument.
Okay, we'll skip the rest of it. So Warren says the 30-year mortgage is one of the best investments a person like you and me, right? An average everyday person can get. We call this the middle-class welfare check, right? But I want you to start to put yourself into this formula, okay? We now know what the target is, financial freedom in 10 years or less. We know how to focus our efforts with the core four. We know how to go fast, get a high return with low risk. The last piece is it's not saving our money, hoping that one day we have enough. It's about moving our money, velocitizing our money. So what if your money was in a vault? And inside of a vault, what if it was appreciating? What if it was generating cash flow? What if it was growing tax-free? And what if you could leverage that money? Let's say you threw $25,000 in here that's now doing all these things. But then you could leverage the money out of your vault and bring it over here to real estate, right? Bring it over to real estate where, again, it's appreciating, it's producing cash flow, it's tax advantage, and we get to use even more leverage. That $25,000 would essentially be a down payment to own and control this home. That cash flow then would go to replenish your vault, and all we do is repeat the process over and over and over and over and over again until we become financially free. Is that sinking in? Mark, does that make sense the way we put that together?
Definitely does. It's just one big circle. One big process.
One big circle.
And Mark, let me ask it to you this way. How many people come to you wanting to buy houses, but they're like, oh, I don't have any money because it's all in my company 401k account, right? And again, that's an example of we need to position the capital where we have access to it to go get the core four and four pillars inside of a piece of real estate. Does that happen, Mark? People want to buy more, but they kick themselves because it's all tied up.
Oh yeah. I mean, every single day people do not have the down payment money. So they ask, what is a better way to come up with that down payment fund, but they don't want a second job, right?
Yeah. So this is how it worked for me in the beginning. Remember, I wanted to control my time, right? And so I said, okay, look, I'm going to throw at the time I was saving about $1,000 a month when I very first started this strategy. And it's been over 10 years ago, but I was throwing that money in a vault, right? And I was trading my time to earn that $1,000 a month. If I didn't work, I didn't have money to save. But when I leveraged my vault and I bought my first piece of real estate, I was generating about $350 a month. Now that didn't change my life. I still had to wake up and go to work the next day, but I took the cash flow, put it back in my vault. And now ultimately what that meant is my real estate now was working at it was doing 35% of the job that I was doing. Right. And so if I can do it again, I went out and bought another property, another $350 a month. Now my real estate has replaced about 70% of my savings. And by the third property, right, I had doubled my savings. Right. My real estate is now working just as hard as I was. And I started to get the idea of, okay, how many times do I have to do this before I become obsolete to this equation? That is the whole path of financial freedom. Now, I'm not going to spend too much time on this, but Mark, you know Fong, right? Fong has been one of your clients. She's bought a lot of real estate. In fact, she posted this just a couple of weeks ago. In the beginning, she felt stuck. Her money was scattered just like mine was, and she had basically no results. She started it with us in April 2019. She funded her vault. She bought her first cash flowing piece of property in 48 days and has followed that up with 9 more. Here she says, I just closed, celebrating another chapter of life this weekend when I finally closed on my 10th property. This is someone that had no education, that her money was stuck, and now she's put it to work. She is on track to be 100% financially free in 5 years, and COVID threw her an interesting twist this year. She lost her job. Now, that's not good, but guess what? The cash flow that she's created gave her the security to not push the panic button. So that's tactic number 1. Tactic number 2 is, okay, look, if property is going to be our pathway out, then how do we put all of this together? We call it Henry Ford's untold secret to wealth. It's how I today generate $10,938 a month, spending less than 30 minutes a week. So like I said, bought the first property. I thought, okay, look, that $350 a month, that's kind of equal to a car payment. Now, back in the day, that was a Toyota Corolla and maybe a little bit more than a car payment. But nonetheless, I started adding it up and saying, okay, well, if one home pays for my car payment, then how many more homes do I need? And I said, okay, look, if I had 4 more homes, that's going to pay for my mortgage. And if I put 3 more homes on top of that, that's going to put food on the table. And I just started adding it up. And for me, my number was 16 homes. For the first time, I had a clear target to say, look, if I can duplicate this result, this behavior 16 times, at the end of this, I own and control my time. My cash flow exceeds my expenses. And so I put my head down. I got excited. I bought 3 homes. And I thought at the end of the day, the first property I bought, my chest was all puffed out. I was excited. The second one, I was naive. And by the third one, I was actually hyperventilating because the exact opposite of what I wanted was actually happening. After 3 homes, I was up here having less time than I ever had before. I had a full-time, very demanding job. But now I would spend hours and hours and hours finding properties. And then when I found the property, I'd have to rehab the property. Once I rehabbed it, I had to go get the tenant and all the things that go with doing real estate. And by the time I bought this third property, I realized I had a big problem on my hands. I could not continue to put this much time in. With every property that I bought, I was actually getting further away from owning my time. And what is worse, Brad can kind of vouch for this, I'm not a very disciplined person when it comes to being mean to my tenants. Now, the easiest way to say that is I had a property here and
if you're a tenant, Ryan's the best landlord.
Yes.
But if you're an investment partner, he's the worst.
Yes. So I had a guy living in my third property and I knew from the beginning I shouldn't have put him in there, but he was willing to give me a higher down payment on the property than anyone else. So I put him in. For the next several months, it was problem after problem after problem after problem after problem. And every time he called me up, I would say, okay, well, you can't pay your rent this month? Oh, that makes sense. Well, let me pay your mortgage for you. Oh, you broke the toilet for the 5th time this month? Hey, don't worry about it. I'll come over there and fix it for you. And, over and over it happened until one day I was up in Rapid City, South Dakota, trying to sell a boardroom of hospital administrators and directors, hospital beds. That's what I did for a career back in the day. And my phone started going crazy. It started ringing and ringing and ringing. And I looked down at my phone and I realized all of the numbers were coming in from different phone numbers, but from the same area code, and I realized there's a problem. So I step out, and my anxiety was through the roof, and I started listening to all my voicemails. And I had a voicemail from my tenant who was yelling and just belligerent and screaming. I had a voicemail from my tenant's wife who was crying, saying she was so sorry. I had a voicemail from several of the neighbors of this home saying they were going to sue me. And I had a voicemail from a police officer saying, son, you better call in, you're in some trouble. And when I called in, I found out that this tenant of this home in the middle of a crowded neighborhood shot with a gun a neighbor's cat, just because he was an ornery, cranky old dude that I had never held accountable, and shot with a gun a neighbor's cat. And so at that moment, guys, I wanted to take my phone and throw it against the wall. I felt like I'd failed again. I lost all my money in the 401k crash in 2008. Now I'm failing at real estate. And I thought, there is no possible way. It doesn't matter what the formula says. I can't be free, until I learned this valuable lesson. If you want to be free, if you want to own and control your time, don't do real estate alone. I thought I could muscle it through myself. I'm going to skip this right here. But this is when I met my man, Mark. Now, Mark, I want you to talk a little bit.
Mark is Superman.
Oh, yeah.
I love him for it.
Yeah, I didn't even have to Photoshop that. I just looked up Mark Hart and that picture came up. I'm like, oh my gosh, this is amazing. So Mark, you've got an entire team here. I was trying to do this myself. So I want to talk a little bit about what your team does for the marketplace. Why don't you tell us a little bit about what your team does for people like me?
Wow. So our team, we have 80 people to pull this off. So it's taken us over 40 years to create the processes that we have. But step one, you have to figure out the location. Where do tenants want to live? Where are the safe places in town where you can get good cash flow, but also good appreciation near major employers? So once you have the location down, then you have to find the property. Finding the property through the MLS is just really not going to work anymore. There are no more foreclosures anymore. So you really have to find a motivated seller. And that is going to take hours and hours of time of sifting through deals. Because everyone's going to try to sell you a property and they think it's worth way more than it actually is. So once you find the property, then you have to actually pay for it. And a lot of times, most folks don't have the cash to pay for it, so they have to get a hard money loan. So they're taking out more risk. Then you have to completely renovate and rehab the property. That process there is where a lot of folks come in and make a lot of mistakes, because that's where it could take too much time. Or we've seen horror stories to where the contractors just disappear. They'll pay them up front and then they're just gone. You show up, they're not there. So you have to be on them every single day. It's like herding cats. It's like babysitting all over the place. So then once the renovation is done, and if you're smart while you're renovating the property, you're also looking for a qualified tenant. So you have to, number one, do all the marketing to attract the tenants to come in. Then once you find a prospective tenant, you have to screen the tenant, collect all of their documents from them, track down the documents to make sure that they're not lying. We've seen completely fake W-2s before. Oh my gosh, we've seen it all. Then once you do finally find someone that you trust to move into your property, you have to help them move in as well. Then you will collect the rent from them on an ongoing monthly basis. And that's where you find people like Ryan that are just way too nice. And they're just going to let them live there rent-free, assuming something goes wrong. And so you have to follow up, go through the collections process. Worst case scenario, go through an eviction. So you have to go to court. There's a lot that has to be done. And then as time goes on, the renovation slowly starts to wear off with normal wear and tear. So you have to respond to repairs. And the repairs always are going to show up on Thanksgiving, Christmas, your birthday, at midnight, on the weekends, when you're at a date, finally the kids are down. That's always when it's going to happen. So your phone is just blowing up.
Oh, Mark, you're making me not want to invest in.
I know. It's a lot going on.
I do real estate.
Oh, it sucks. So then after all that, yep, exactly. If they don't pay rent, then you have to deal with the evictions. You have to go to court. You have to follow through. Worst case scenario, you even have to call the sheriff to have them physically be removed. Terrible, terrible things from a worst case scenario standpoint.
And Mark, that's just for one property. So it was me trying to do the job of 80 people for one property. And by the time I had 3, this is where I realized, man, I've gone by myself as far as I could possibly go. And once I realized how much was actually here, and once I got clear about what I wanted, that's where I said, look, Mark, why don't you do what you're good at? Why don't you go do those jobs, all the jobs that require 80 people? And why don't then We just rinse and repeat it. And ultimately, at the end of the day, if Mark's Superman, I get to be this Lego dude saying, look, everything is awesome. And this is really what allowed me to get back in the game. You know, this is what my portfolio looks like now. I get emails from my property managers. Here's Allison, here's what Randall, here's Gary, telling me about what's going on. Hey, a new lease has been signed or something needed to be repaired according to standards. We've got it all taken care of. And I manage my system as the CEO, but not the one that has to go out and do all the work and rinse and repeat every single year. So for me,
bring up your calculator really quick.
Do
this. I want to show some math here. This blew me away when I did this the first time with you, Ryan. Bring up just a standard. Yep. You had 3 properties. You made about $1,000 a month, right?
Yep.
But $1,000, but you were spending 20 hours a week trying to do the jobs of all these people. So divide this by 80 hours a month to get that $1,000. You're making $12.50 an hour, bro. Like, you had a master's degree, right? And this is why you were so stuck. Doing real estate yourself is a minimum wage, barely better than a minimum wage job.
At least at a minimum wage job, you get to eat the Happy Meal when you're done with the job.
Yeah.
I didn't get to eat the Happy Meal. I had to take the calls. So, you know, what's possible now is a whole different game. Like, I found Mark and the MIP team. I started investing in this way. It gave me the confidence to get back in the game and do it passively. Like, to really be a CEO saying, how do I put a system together to ensure I get as a consistent outcome? It allowed me to go from 3 properties to the 16 that I needed. And guess what, guys? I did it in 4 years. This allowed me to walk away from my W-2 job. And yes, it's not 100% mailbox. I have to manage the system.
Pick up Mark's phone call once in a while and not totally avoid him.
Right. You're going to be the asset manager. Exactly.
Yeah. And look, when Mark calls me, I'm not frowning. I'm like, oh, sweet, Mark, you took care of another problem for me. Thanks, buddy. When do we get to buy the next property? Right. So all along the way, I was able to secure the money I was making in my vault. So I never, ever, ever went backwards. And so this really becomes the game. Ricardo and Alisa, they got into the game with us a little over a year ago. Ricardo's a high paying medical practitioner, or a high earning medical practitioner. But man, same thing. He was stuck, right? He never was able to figure out the game of growing his wealth and holding down a life and a job at the same time. Since that time, he's secured $200,000 in vaults. He's gone from 0 to 9 cash flowing properties. He's $4,000 a month in combined passive income right now. And this is what I love the most. And this is just one. Like, really, ultimately, what happened when Ricardo came in is he realized what was most valuable. And all the things that he was putting off for one day for this elusive idea of retirement, he started living in the moment. He started using this cash flow to build and live a life that mattered today. This is just one of the excursions that he's been on with he and his wife here. But that's what this is all about, guys. Financial freedom isn't really about how much real estate you have. It's not about how many vaults you have. Those are just tools. It's about how much time you own and how you use that time to build a life that matters for you. Tactic number 3 is how we put it all together. Now, this is the dirty little secret that Brad's going to expose for us because he got to spend the time on Wall Street, but it's the real secret that financial advisors on Wall Street do not want you to know, because if you know the secret, it takes their power away and it gives it to you. This is what allows you to become financially free in 10 years or less. So Brad, walk us through it.
So here's what we're taught, right? Traditional financial people, very smart, all formulas and back-tested data and all that kind of stuff says, I have a perfect formula that if you buy a little bit of things in all of these areas, you'll do well with your money. Sound pretty familiar, right? So diversification becomes the holy grail to investing. But it was interesting because when I worked on Wall Street, I worked in the private wealth division of Goldman Sachs. So these dudes had a few more than a couple dimes to rub together, right? And I worked on the tax side of it, but I got to see every day exactly what these people are doing. And guess what they were not doing? They were not diversifying.
No.
Made me really, really confused. So then I started to study people like Warren Buffett. I'm like, okay, what's Warren Buffett up to? So bring up the 2 quotes here. He said this, he said, the goal of a non-professional should not be to pick winners, right? Neither he nor his helpers can do that, but should rather be to own a cross-section of businesses and an aggregator bound to do well. This is him very eloquently saying diversify, right? If you're a non-professional. But then in the same speech, he then says this: diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. And I saw this contrast on Wall Street. I was like, wait a minute, all the non-professionals, that side of the investment world, they're not picking winners and losers, they're diversifying, and they're doing that. Those that are not ignorant, those that know what's going on, they understand that while it may be a no lose strategy, it'll make sure you don't lose your shirt. It by definition also becomes a no win strategy as well. So again, don't do what they're doing now, do what they did to get there. And even worse, I just recently read an article by a guy who purported to be very smart and back tested all this stuff and came to this conclusion. It's important to know that stock pickers are really just gamblers, okay? Deep inside of Wall Street, this is now, he's blowing the whistle on this. But his next paragraph is what made me actually lose my lunch, okay? He said, you can do better than 71% of professional stock pickers by just being average and buying low-cost index ETFs. Guys, we are not here to try to preach a better way to diversify your risk, right? I don't want you to be average. Mark, do you want any of your investors to be average? Are you ever okay with average?
Never, never.
But this has become, we're living in a cult of average that as long as we get average results or do average plus one, we're on our way. That is not what this presentation is about. That is not what I want out of my life. That is not what I want for you, right? This is about how to beat average and become extraordinary, okay? And it is not through diversification, because at the end of the day, no one will care more about the success of your financial plan than you do. Okay, so the real key here, and we think about this like an iceberg, right? Wealth is very hard to see, right? We get a little bit of view of what people are doing on the top. They've let us see their stocks, bonds, and mutual funds, and we think we're doing the right thing. But underneath, the 90% of the iceberg that sits underneath, that actually created the wealth in the first place, are the three assets that we talked about, right? And they're following this very focused approach to increasing their returns by increasing control, decreasing their risk, and using the four pillars to drive their investments. That's how they created their wealth in the first place. And again, back to path dependency, we're helping show you the path to become financially free, right? Not the path to protect all the money that you've already made. This is the law of creating the wealth in the first place. So if we want big results, if you want average, totally cool. I'll high five you and I'll see you at the park when our kids are playing, right? But if you want big results, you've got to stick to the financial freedom formula. Ignore everything else.
So this is where it all comes to a head, right? I mean, we just gave you the principles. We literally gave you the principles of achieving financial freedom. I hope that this empowered you to understand what money is, what it represents, how to make more clear and intentional decisions. But where we get a lot of people asking us, okay, that sounds awesome, but what about me? I'm a special snowflake, right? How does this work for me in my life with my situation? I've got this student debt, or I'm only making this much money, or all my money is locked up in a 401k. So how do we blend and marry this idea of principles with tactics? How do we take what works every time and tactically apply it to you, your goals, and your resources? This is where the art and the science of what we call a game plan comes in. And the game plan is really a pretty simple concept. There's four elements associated with a game plan. Number one, it's the possibility, right? And we gave you this idea. The reason we put a time frame around this is we believe anyone that follows this strategy can be financially free in 10 years or less. But if we draw this out, we like to kind of envision this kind of like a game of dominoes. If we come and take you from where you're at today to financial freedom in 10 years, that's a really big domino, right? It's like, okay, that sounds exciting. It's a great goal, but I can't do that. It's just too much, right? So the next thing is, we need to eliminate all of the problems, right? This goes back to the idea of 97-3. If you're following a diversified 97 approach, well, this isn't possible for you anyway. If you're willing to focus, then we can get clear on the present moment. And the present moment it's the little domino. It's where are you starting today, right? How much money are you making? How much money are you saving? Where is it going? How much have you accumulated? And in the game of dominoes, there's a pretty interesting phenomenon. It's about building momentum. But for every domino that you stack up and knock down, the domino next to it, the first domino has enough momentum to knock over a domino 50% bigger, right? And so if we stack this up, every domino has the ability to knock over a domino a little bit bigger than the one before that. And if you read the book, The One Thing, he talks about this idea that, after 18 dominoes, you have a domino that's big enough to knock over the Eiffel Tower. By, like 22 dominoes, you have a domino big enough to knock over Mount Everest. And by 50 dominoes, you have a domino big enough to touch the moon. That's really what this is. We start where you're at today. And rather than setting these big, targets or these big goals of, hey, financial freedom one day or retirement at 65, we just say, what's the one thing you need to do first? Maybe it's set up your vault. What's the one thing you need to do second? Well, maybe it's buy your first piece of real estate. What's the one thing you need to do after that? And it's just setting up a target every, 90 days to say, I'm just going to stay focused on knocking over bigger and bigger dominoes. That is the goal. Now, before we end this presentation, we want you to see one of the reasons that we know financial freedom is so much more practical and attainable when you follow the financial freedom formula. When I was putting all my money in a 401k, remember that math equation that we did at the beginning, right? We multiplied my desired outcome by 25. If I had a $200,000 income, I needed 25 times that income in assets. And so the reason for that is I had been putting all my money in a 401k. All of my liabilities were pushed to the future, the very thing I was saving for. Brad, you played the tax game a little bit of a different way. So let's walk through how the tax code works and why we call this a strike number.
And remember, all we're trying to figure out is how do we own our time, right? And the very basic definition of that is once our cash flow exceeds our expenses. But too many people interpret that as my cash flow has to replace my income, right? That's what you're taught to do through traditional advice is replace your income. It's not what this game is about. It's just managing to replace your expenses. So we've created this idea to frame this or bring this target a lot closer to you to say, all we need is a strike number. And the strike number is once you have that, you get to go on strike, right? You get to walk out, right? And it's very easy. If you look at what is your income, just take your current income right now. We'll walk through an example. But if you're doing this right, you can earn income without having to pay any taxes. That means no federal income tax, no state income tax, no employment tax, right? Not to mention no tax to commute to your job, right? And own a second car for that, and no tax for buying nice dress clothes. Ryan, what do we dress in every day? T-shirt.
T-shirt.
And Ryan, I think, is in shorts probably. So we don't have to pay those taxes either, right? We get to back all that out. And then once I'm free and I own all of my time, I don't have to keep saving toward retirement because I'm already there. So we get to back that out. Okay, this is what it would look like if your salary's, again, $200,000. You're paying somewhere north of 30 grand in federal income taxes, right? Then you're paying, the average person is paying something north of $10,000 in state taxes, and they're paying another 10 grand in employment taxes, okay? Then if they're a good saver and saving 10% of their income, they're saving another $20,000. So
Brad,
that means for them to go on strike, all they really need, hit the button one more time.
Well, before we do that, this was and this always comes up because we don't understand the tax code. And the best way you explained it to me back in the day is that the tax code is like a treasure map. It's really written to tell you how to not pay taxes if you know how to read it and follow it. And, we're just used to, this is just natural. We have to make $200,000. We have to pay our federal taxes. We have to pay our state taxes and our employment taxes. But what if your income was coming from a vault and from investment real estate, right? What if that's where your cash flow is coming from? Are these things, is that what you're saying, is they're not required anymore?
0% tax on all of that income created from those two vehicles. That's why we do it. That's why the rich do it. This is why Donald Trump says that he doesn't pay any taxes, and that makes him smart, right? This is the game the wealthy are playing that is accessible and achievable to us, just not through traditional standard investment advice.
So what that means then is if I were bringing in $128,000 of spendable money, it's the same as making $200,000 gross and then jumping through all the hoops to net 128. So that now becomes your strike number. This is the very same thing that allowed me to walk away from a corporate career making six figures in 4 years, right? It's about knowing how the tax code works.
And this is how close you were able to bring it, right? That's about $10,000 a month, or only about 60% of the income that you're making. That target is a lot closer. That's only about 20 houses, right? It's not hundreds of these single family homes, Ryan. That's why yours was 16, right? Very, very achievable and doable. And then you can get on with the rest of whatever it is you want to do with your time.
Okay. So Mark, we've talked a lot. I hope this made sense for your audience. The whole goal of all of this is, look, the idea of retirement, the idea of net worth, the idea of one day, that is the cult of the average. We're inviting you to step over the line. We're inviting you to stop fighting against gravity. Start setting up clear, measurable, actionable targets that truly empower you to get what you want, that truly empowers you to own and control your time. The more you can narrow your vision, the more expertise you can develop, We do this in the art and the science of a game plan, right? The game plan is really meant to show you a pathway to doing it in 10 years, then breaking it down to saying, okay, over the next 12 months, what are all the things that need to happen to keep you on track for a 10-year outcome? And more specifically, what are the first things you need to do to start making meaningful progress and start generating momentum? You know, Scott, for us, he's a great example, again, of someone that's worked with Memphis investment properties that have done amazing things. He, just like me, still is a busy executive. When he came to the game, he went a little bit farther than I did. He had 5 properties and he felt completely overwhelmed. He was stuck. He couldn't go any further. He built a game plan, started following the whole strategy. He's got 2 vaults now with over 450,000. He currently has 18 cash flowing units. Many of them are in Memphis. He's generating $7,800 a month in spendable income, and he's ready. He's almost ready to walk away and truly start living a purpose-driven life. And he's in his mid-50s, right? So this is what is possible when you know how to play the game, not just play it to get average results, but play it to win. All it takes, get a clear game plan. Get clear with the game plan. This gives you the clarity to focus on the 3% of things that actually matter. Now you're with the clarity, follow a proven formula, follow a system that will give you duplicatable results. You should take $1 and know how to put it into a system and get a consistent result time in and time out. Once you've done that, then fill your vaults, never go backwards, buy cash flowing real estate from Memphis Invest, and all you have to do is settle into the path, rinse and repeat, do it over and over and over again. We know it works. We've seen it work for our lives. We've seen it work for Mark's life. We've seen it work for hundreds of people inside of our community. You get to ask yourself a question. Can you see something different for your life? Because the only thing that's separating you from where you're at today and where you want to be, it's having a clear vision of what you want, being committed to that vision, and becoming the person capable of pulling that future, pulling that possibility into the present. You are the asset. The more you invest in yourself, the more you invest in your mindset, your skill sets, and your network, the faster you achieve the results you want. You have already proven that you're a person capable of this because you've watched a webinar where 3 guys talked about this for 1 hour. If you are ready to rise up so that you can live free, we've modeled after one of our favorite heroes, Ron Swanson, and we've built a page just for our MIP partners and friends. So go to cashflowtactics.com/MIP, and we're going to take you a little bit further down the rabbit hole to show you, again, some more math, some more strategies, so you can see why traditional finance will never work and why the more you focus, the faster your results go. So with that being said, Mark, we appreciate this opportunity. It's been such a pleasure and honor to connect with you, your community, and we invite each one of you to rise up so that you can live free.
Awesome, guys. Well, we really appreciate that. I hope everyone there really found a lot of value in it. And, you know, what I love about the Cash Flow Tactics guys and the entire process is that, you know, they're not reinventing the wheel. They're taking a tried and true plan and they're just replicatable and duplicatable with it. And it's also great to see that just about every single one of those examples you had in your presentation, we've actually worked with before. You know that. That's great. So if you do want more information, highly recommend reaching out to them. They have a lot of education on their website, so definitely follow that link, and hope you guys enjoy the rest of the 2020 SOFA Summit. Thanks, guys.
Thank you.